Hello and welcome to the weekly Forex Review and Outlook here at xm.com. I'm Andreas, your EU currency analyst, and I'm here with our chief economist, Michalis Frendiadis. So Michalis, the British pound and the Australian dollar have been performing strongly relative to the US currency this week. Can you give us a bit more context? Why is this the case?
Yes, it's very interesting that the British pound has been very volatile. So we have seen it moving up and down quite a lot. The latest news was that the EU might offer the UK a 2-year transition deal so that they could have 2 more years in terms of finding what the final deal is going to be, maybe. But in the meantime, they are going to ask them to continue with their current obligations as an EU member. So, to be honest, I am not sure whether that is what the UK is looking for right now. So, but the market seems to like it. So we are getting like these up and downs related to the Brexit process, but the Brexit negotiation process seems to be having hitting some major obstacles. Now, next week we are going to switch the focus back to some important economic data from the UK, such as inflation, employment statistics, and unemployment, of course, and retail sales. So I think this set of statistics is going to help us figure out or confirm, if you want, whether the Bank of England is going to hike rates in its meeting at early November. If the data is more or less okay, I think that's another green light for the rate hike.
And moving on to the Australian dollar, what do you have to say on that?
The Australian dollar has also performed strongly. I think this was on the back of also some strong data out of China, so some strong trade data. We are seeing a lot of demand for commodities, for commodity imports out of China. Commodity prices are strong, which is underpinning the Aussie. It's less certain whether Australia itself is going to push up interest rates. The RBA is going to push up interest rates further. We had the financial stability review from the RBA today, and it said that any interest rate hikes might hit over-indebted households. So that is like a cautionary sign for those expecting rapid interest rate increases out of Australia, an economy which is certainly doing very well. But I understand you might have some more to say about China, and it will be an interesting week ahead for China as well.
Yes, Michalis, you didn't mention China. It's Australia's largest trading partner, and they're also the largest economy, of course. Well, next week, China, on Monday, we'll see the release of producer and consumer price data. That will be interesting to watch. And on Thursday, third quarter GDP figures will be released out of China. But on the background will be the Communist Party Congress, which begins on Wednesday. It takes place in Beijing, and this is a political event that takes place once every 5 years, and it has the mandate of considering and approving new policies, as well as appointing to key positions those individuals that will lead China moving forward. But moving on from China, allow me to say, Michalis, that the euro has also been performing relatively strongly this week relative to the dollar. It is up by 0.8% on a weekly basis. It was last up by 0.8%. We had some strong data out of Eurozone countries this week, specifically Germany, but also other countries such as Italy. But one theme that has been helping the Eurozone's common currency has been the seeming de-escalation of the crisis in Catalonia. Of course, Mariano Rajoy on Wednesday did give an ultimatum to the Catalan president. He told him that I'm giving you 5 days basically to clarify whether you did declare independence or not. And in case the answer is yes, you have an additional 3 days to revoke that decision. Otherwise, the Spanish government is going to have to take actions such as curtailing the region's economy, and of course such a development will bring back tensions on the table. But something else that has been dominating attention over the last couple of days, maybe mostly maybe today morning a bit more, were reports that the ECB will cut down on its asset purchases starting next year. Specifically, under the current plan, asset purchases stand at 60 billion euros per month, and it's expected that when they complete their meeting, the two-day meeting, the ECB, when it completes its two-day meeting, that those purchases will be cut to 30 billion per month for 9 months, but it is expected that they will also leave the door open to extend the program should they deem that this is appropriate.
And then Draghi has also said that he's going to keep the existing very low rates and the negative deposit rate for a long time after even when the asset purchase program ends. And can you also round up with what is going to be interesting for the US dollar next week and what's on the minds of traders concerning the US dollar?
Yes, before doing that, Michalis, let's say that the dollar is down on the week after ending 4 straight weeks on a positive tone. Some themes that have been affecting the dollar this week were the Fed's perceived dovishness after the release of the minutes pertaining to the September meeting, fresh doubts on whether Trump can deliver on tax reform, and the North Korea-US path remaining on the table. But moving on to next week, in terms of data, I would say what the markets will be looking for will be Tuesday's industrial production figures and Friday's existing home sales. So I would say it is relatively quiet in terms of data out of the US.
Yeah, of course we have the IMF World Bank meetings over the coming weekend, so maybe we are going to get some statements from officials there, both central bankers and government officials. Thank you very much, Andreas. Thank you everyone for watching and have a great day.